Bullish, ticker symbol BLSH, didn't just appear out of nowhere. It was born from one of the most ambitious plays in the cryptocurrency exchange industry. Launched in 2021 by Block.one, the same company that famously raised over $4 billion in the EOS initial coin offering, Bullish was marketed as the next-generation crypto exchange that would merge traditional finance infrastructure with DeFi-style liquidity pools. From day one, Bullish's pitch was clear: deep liquidity from an automated market maker, robust order books for professional traders, and institutional-grade compliance and security. And it wasn't just talk. The exchange was backed by big names like Peter Thiel, Alan Howard, and hedge fund giant Louis Bacon. Those are not your average crypto bros. These are billionaire-level institutional players putting serious capital behind a bet. What made Bullish stand out was its structure. Instead of the usual build it fast, figure it out later approach most crypto startups took, Bullish emphasized bank-like regulation and Fort Knox-level custody solutions. They were targeting high-net-worth clients and institutional funds, people who wouldn't touch offshore exchanges due to compliance risk. In 2023, Bullish made a major move, acquiring CoinDesk, one of the largest crypto media companies. Strategically, that gave Bullish brand authority and proximity to the information flow that moves the market. Owning one of crypto's main news pipelines kept Bullish in the conversation daily. Now, in 2025, Bullish is trending around its planned public listing under ticker BLSH. If this listing lands, it could mark one of the first major regulated crypto exchanges to rival Coinbase in US markets. The bigger point: Bullish is a strategic financial play at the intersection of institutional-grade trading, regulated exchange services, and media influence. That combo has hedge funds, family offices, and even sovereign wealth funds treating BLSH as exposure to both the infrastructure and the narrative engine of the crypto market. Why it's surging right now? This isn't just a meme pump. The current attention ties to a few catalysts. First, liquidity. Bullish has been quietly building deep pools that attract both retail and institutional flow. When liquidity spikes, spreads tighten, and whales step in. That's how momentum sustains. Second, partnerships and integrations. Recent cross-chain connectivity and faster settlements mean more on-chain activity, more fees, and more visibility. These aren't fluff press releases. They translate into throughput. Third, the narrative shift. With uncertainty in traditional markets, capital rotates into high-potential crypto infrastructure. Bullish's hybrid posture, DeFi mechanics plus a regulated venue, appeals to both purists and institutions that need compliance. Lastly, the technicals. BLSH recently cleared a key resistance zone on rising volume. Momentum flipped positive. Algorithms that scan for breakouts trigger on that behavior, and you get reflexive follow-through. The lesson: what to watch next. If you're chasing noise, you're already late. If you're playing the move, use a checklist, not hopium. Liquidity you can verify. Compare reported volume with independent data and look at book depth around the 1% spread. Real liquidity lets you exit. Fake liquidity traps you. Catalysts on a calendar, regulatory filings, reserve attestations, custody partnerships, major integrations. You want dated events, not vibes. Regulatory perimeter. Bullish's pitch is compliance. A licensing delay or action gets priced in fast. Clean progress can unlock new buyers. Revenue drivers that scale. Maker-taker fees, institutional prime services, cross-chain settlement volumes. Media, CoinDesk, is a distribution moat, but the engine is transaction throughput. Risk controls, proof of reserves that include liabilities, segregation of client assets, counterparty exposure. Post-2022, transparency is the moat. Price volume behavior. Breakouts with expanding volume and tight consolidations are constructive. Vertical moves on thin books are exit signals. Position sizing. Treat it like a venture bet with a ticker. 1 to 2% risk per idea. Hard stops, no, pray and hold. Momentum fades faster than it forms. Bottom line, don't chase what's loud, track what's real. If Bullish turns its liquidity and compliance story into durable revenue, it earns a place on the board. If not, it's just another headline. Be greedy for verification, not velocity.